We stay with money matters, and the JSE is slightly down, mainly pressured by financials. Traders anticipate significant economic releases from major economies and awaited additional corporate results throughout the week. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors, and he joins us now with an overview of the markets. Thank you very much, Petri, for your time this afternoon. Some very observant viewers have been wondering, what happened to the business news? So help us understand, and maybe it could be an education moment. The first 2 weeks we didn't see or hear from you. What happened to the markets?
Good. Well, thank you firstly for having me, and I think Happy New Year and all of that is in order. The first 2 weeks were relatively quiet, to be honest with you. If we look at how the Aussie traded, we kind of, where did we start? Actually, beginning of the year, I think the first trading session we had was the 2nd of January. We felt quite hard. I mean, the top 40 index was trading at around 70,500 before the new year started, and we're currently at 67,200. So that's quite a large drop. It's about 2,000 points, right? So the market came off quite a little bit, but since then, over the last couple of days, has really gone sideways. I think the market is really taking into consideration a number of different things. Firstly, heightened tensions in the Middle East. That situation just keeps escalating. We see that, I don't know how to pronounce this, Houthis? I don't know. Essentially, there we go. Essentially, what amounts to being a terrorist group within Yemen is attacking sort of Western container ships and stuff. And the U.S. has sent an entire fleet, including aircraft carriers and all sorts of destroyers and things to the area. So that is definitely not good, right? And I think that the market is looking at this situation, and there's a number of different things happening, and I think some of the things we're probably going to be talking about today is the rand and as well as the gold price. And all of these things really are being driven by, this heightened escalation of tensions, or this continuous escalation of tensions that's happening in the Middle East. And then you combine that with, everybody's still on holiday. By this morning, about half an hour into the trading session, something like, I know it's going to sound crazy, but something like 100 million rand had traded only in the first hour of the day, which is very, very little for a stock exchange to do, right? And it sounds like a lot of money, but it's really not. If we consider that, we're doing in the billions of rands a day in turnover. A bad day, a really bad day is like 9 billion rand, right? So to do 100 million in the first sort of hour is really a very dead, quiet environment. And we see that I think remains persistent. So we're seeing very large moves and very little volume. If you look at the top 40 index now, it's down 1% in the day. At one point we were positive early this morning, but we're just absolutely getting hammered at this point. And I think a large part of that is really just because there aren't a lot of people that are participating in the market. So we've had this phenomena where we have reducing volumes over the last couple of years, which we can debate for a long period as to what is causing that. But at the same time, I think there's just a lot of people that are still on holiday, right?
All right.
And this is making the market somewhat erratic.
Okay. Welcome back. The rand is slightly sluggish. You mentioned the rand trading at around 1864. Help us make sense of some of the factors that are driving the slump. Could it be what you're talking about in terms of the situation on the Red Sea?
Yeah, I think that's definitely a part of it, right? I think absolutely that is an indicator. I think it's interesting to note that last year what was quite a big news item was, some of the banks were being charged with manipulating the rand, and that court case has now been dropped. So that's interesting. So, I'm not 100% sure exactly what the story is there, but I think that, as it turns out, currencies are quite a bit harder to manipulate than what people alleged, right? The currency market is quite a bit bigger than most of the banks as well. So that's interesting. I think that there's a little bit of, positive sentiment around that a lot of the banks are kind of get off the hook here, if you will. However, if you look at the rand's performance, really sort of since the beginning of the year, we started off the year around 1860, and we've been kind of wishy-washy around that level. I mean, the weakest we were was around 1895. Very early in the year, and we're back to that 1867 level now. So it looks to me as if 1860 is a bit of a support level, and that we might be looking at further rand weakness going forward. And I think a lot of that is sort of rooted in, as I mentioned before, the fears around the Middle East, and also a new year begins, right? So there's a lot of things that are potential market movers. There's elections coming up. I think there's a local election coming up. There's a U.S. election coming up. Those are very big. I think actually the majority of countries on Earth are actually having elections this year, which is something really interesting. It doesn't happen very often exactly like that. As well as, there's a lot of talk around this U.S. recession. Is it happening? Is it not? Are they going to get a soft landing? What happens when a Republican president comes in place? Does that really just boost the economy and the market to run again? So there's a lot of unknowns at this point, and I think that there's a lot of overhang. Like if we continue to kind of hang word by word on the U.S. Fed statements, the last statement, interestingly enough, they started really removing all language that hints at or leans towards interest rate hikes. So it seems as though that interest rate cutting cycle is nearing. How does that impact markets? How does that impact currencies? I think the world is just kind of digesting that and really forming a view for what it wants to do for the rest of the year before, really converting to a direction. So the Rand, a little sluggish today, about 1/3% down. Market in general trading relatively low volumes. I think if I were to place any trades now, I'd probably go long the local market as well as short the Rand, so essentially betting on Rand weakness, and I'll probably looking to buy a bit of gold.
Okay, let's talk about that because it rose above $2,050 an ounce in early trade, climbing for the third straight session. What's driving the gold moves?
I think, as mentioned, the gold moves is really primarily driven by tension in the Middle East, right? And as that, there's a number of wars taking place. So there is Ukraine, which is still around. We might not, be talking about it all that much anymore, but it's still happening. And now, the Middle Eastern war is looking like it wants to escalate. So, and this is interesting because, for example, Yemen is an independent country, but inside of Yemen there's a terrorist group, the Houthis, that are Houthis. Don't know how to say it. You said it perfectly earlier. So thank you. They are, adding to tension, and if this starts to draw other countries in the region into conflict, that's going to potentially have severe supply chain impact, severe oil price impact, and then of course the market wants safety, and safety is usually yellow and shiny and comes from the ground. So people are buying gold for that reason. I think that gold is probably a good, obviously an inflation hedge, as we know, but also a good flight to safety during different times, during times of uncertainty. So I find gold quite attractive at this stage as well. I wouldn't be surprised if we see record highs in the gold price later this year.
Citigroup plans to cut 20,000 jobs over the next 2 years after the bank reported a $1.8 billion loss for the fourth quarter. Talk us through those developments.
So, it's a bit deceiving, really. So they are in the midst of a restructuring. So a lot of that loss that they made is one-offs, right? I think there was $3.8 billion worth of once-off write-downs that they had to pass in expenses and restructuring costs, which pushed them into a loss-making position, which is the perfect cover, I guess, if you want to cut just under 10% of your workforce. I think they employed 239,000 people, and 20,000 are going to be essentially laid off over the next period. What's interesting also is that they are spinning out or separately listing their Mexican sort of retail banking business or consumer-facing banking business, which removes another 40,000 jobs from the Citigroup, book, if you will. So they are essentially just in the process of streamlining and simplifying their business, and this is part of their strategy. So I think it is a little deceiving to say that, well, look, because, and I guess this is what companies do, right? They have to frame the news in some sort of a way to make themselves look, less bad. But they say, well, look, we made this $1.8 billion loss, so we're using that as justification to lay off 20,000 people. Truth is that $1.8 billion loss is as the cost, as a result of a restructuring in order to save money, and laying off 20,000 people is part of the plan. So that's essentially, in a nutshell, what's happening there.
Not sure if we caught it last week where the presidency was asking big business, they used the word big business, not to lay people off and just wait for them to sort out the electricity situation. And so when you read between the lines, what are you seeing?
Well, on the local front, I think it's really a lot harder. I think it's hard to keep people employed if you don't have money to pay their salaries. And if your business is failing because it doesn't have electricity, you can't keep paying people if you don't have the money to do so. I think the president's out of touch, to be frank. Fix the electricity situation in the
Okay. Let's take a look at Apple. It's offering discounts of as much as 1,300 Rand on its latest iPhones in China for the first time in years. What's going on?
Well, firstly, that's not a very big discount. I don't know if you've seen the price of iPhones. Gee, it amounts to like $70 or something like that, which isn't a huge amount. So sometimes what we'll see in China is that retailers will offer discounts on Apple products. It's very rare to see Apple themselves through their own retail channel offer discount, right? This is not something that happens very regularly. What's happening there is there's a 30% decline in demand for iPhones for, I think, a number of reasons. One, the primary reason really is just because there are better alternatives. iPhones are great. They really are. I used them for a very long time, and I'm currently not using an iPhone, and I was thinking the other day that when time comes for a new phone, I'll probably go back to an iPhone. They are fantastic, but they are crazy overpriced. All Mac products, for that matter, are really priced at a very, very expensive price point, and there are better, cheaper alternatives. One of the alternatives, for example, is Huawei launched a phone, don't know the model, P60 something, I don't know. But essentially it uses a Mate 60 Pro, that's what it's called. And as we know, the US and China are in a bit of a semiconductor battle over who's got the best chip manufacturing, and, you know, potentially the Taiwanese conflict, which is something that we didn't speak about, which I suppose could segue into here. You know, one of the reasons the Rand, for example, is maybe on the back foot and the gold price is high is because of the election outcome in Taiwan. Maybe a conversation for another day. But a lot of that tension really is around microchips and processors and that type of stuff. And the US has been doing everything they can to deprive China of high quality sort of next generation chips. And last year, Huawei launched the Mate 60 Pro, which had one of the world's best chips, really kind of just sticking it to the Americans, if you will, in this phone. And that was essentially creating a better, faster smartphone for a lower price point. So people start to shift towards that. You know, consumers shift, they go where they can find the most value. So Xiaomi is one sort of brand, Huawei is another brand that really are doing very well in China, and that's taking market share from Apple, and they've lost something like 30% of their demand for their products. So they have to do something in order to try to defend market share, and offering discounts in a sort of desperate, you know, offering the world's smallest discount is what they think is going to help. Is what they think is going to help. So I guess we'll see how that works out.
Yeah, we'll see how that works out. Petri Redelinghuys, good to see you. Thank you very much for your time this afternoon. Founder and trader of Herenya Capital Advisors.